right, welcome back to the show. Today we have MC Laubscher with Producers Wealth, and we actually had Carl Schnitzer on a few shows ago to talk about infinity banking and kind of the ins and outs of that. And today we've got MC on to talk alternative assets, and I'm sure a lot of other things he's got going on. But MC, welcome to the show, man.
Thank you so much for having me, John. Great to connect, and I've been looking forward to our conversation.
Yeah, absolutely. So most people that are listening probably invest or want to invest in real estate. So maybe this is a good place to start. What other alternative assets can people invest in that are cash flowing, maybe not cash flowing? Just kind of walk us through what your thoughts are there.
Yeah. So the alternative asset world is just simply, it's called alternative, which is interesting, but it's just an alternative to Wall Street. I guess that's where the term comes from, because it's just most people by default end up just investing in Wall Street. They continue to invest there, and they're there their entire lives. And it's just by default, because that's what you're told what to do, right?
Yep.
From your grandparents to your parents, they just tell you this is what you got to do. You got to max out your qualified retirement plans. And if you have some money left over, give it to a financial advisor to diversify in stocks, bonds, and mutual funds. Yep. So alternative assets are just assets that are the alternative to Wall Street, but they're real. They've been around for hundreds and some thousands of years. So everybody knows real estate, different forms of real estate, commodities, gold, silver, strategic metals. There's a whole, and of course, in commodities, you could put oil and gas too, right? Mm-hmm. So these are all, and there's many other different forms and different type of asset classes, which I know we're going to jump into. But those are just some of the alternative assets, which are just real assets. So when you think about alternative asset investing in the world that we're in, it's pretty exciting. And I know you've been over a decade into the space yourself. One of the things that I see that's very, very interesting is that a lot of people find this space because they're looking for it. They're intentionally looking for it. And why are they looking for it? Well, in 2008, 2009, the great financial crisis hit, and a lot of people were hurt financially. They experienced a lot of pain. And they were looking for alternatives. If you think about it, most Americans, and not just Americans, actually everybody around the world, especially in the Western world, you have your money either in your house, because that, you got to buy a house. So you buy the house, and then the rest of the money, you max out your qualified plans. And then what's left over either goes to a second property, like a house. I'm here in the Northeast, just outside of Philadelphia, a house at the shore, that you can maybe use yourself and rent out, or you give the rest to a financial advisor. So most people in 2008, 2009, when that great financial crisis hit, were either in real estate, single family, and again, different market where they own it themselves, and maybe a second property, which they also use and rent out for some part of the year, or Wall Street, and they got clobbered, both asset classes. So there was a lot of financial pain. So then they come over to the alternative asset world, which they find for looking for alternatives. And I would say from that great financial crisis too, the market bottomed out. This is debatable depending on who you listen to, but around 2011, 2012, that's kind of a safe window where you're like, okay, it started to crash 2008. Everybody remember the Lehman Brothers moment. Nobody remembers the Bear Stearns moment earlier that year, where Bear Stearns got eaten up by JP Morgan Chase. You had your Lehman moment. You had people with boxes taking out their stuff from Lehman Brothers. It's done. And then that's when it happened in October of 2008. Well, then again, around about the end of 2011, beginning of 2012, it bottomed. And then most people got into the alternative asset space too, which bottomed at that time. Now, if you started investing in this space, regardless of which asset class, you have had one heck of a run for 10 years. You couldn't lose money, even if you tried, because everything, you came in at a rock bottom at that point, right? So up until, I would argue, again, around about when the interest rate spike started to happen in 2022, which was towards like Q3, Q4. That's kind of where we topped as far as an asset, alternative asset class, and of course the other financial markets. And ever since then, you've started to see like a rumbling. You started to see, some stuff, deals go bad. And the reason why I'm sharing this is I just wanted to make this very, very clear is, when you are coming from one world like Wall Street into the alternative asset space and you're investing, there are market cycles in both of these. So there are market cycles in which, in Wall Street, you could buy at the bottom, run it all up, sell, buy low, sell high, and then again, when market crash, go in and buy low again and sell high, just like what all the professionals do. Yep. So you don't feel the pain. You could do the same thing in the alternative asset world, and you could lose money in both of these worlds. I know people that have gotten clobbered in both of these worlds. I also know people that have made really, really good money and fortunes in both of these worlds. So, I just wanted to share that because there's a lot of people that have come over that have now started to see, like I said, projects go bad in the alternative asset world. It could happen on both sides of this universe, Wall Street and the alternative asset world.
Yeah. Where do you think we are in the market cycle, and what do you think's coming?
Yeah, that's a great question. So I would say that we have seen a lot of pain already in the past 12 to 18 months, right? There's been a lot of projects that have fallen apart, whether it be commercial real estate, carbon capture, ATMs. I could go on and on with all these different niches. And we have not seen a crash yet. And usually a crash happens when there's a liquidity squeeze, meaning like liquidity is just every market needs money flow, right? So Wall Street needs money flowing constantly, buying and selling. And when liquidity runs out, and that's usually when you start to see sell-offs and market crashes. The same thing happens in the alternative asset world where when the money flow stops, that's when there's not a demand anymore so much for assets. And of course, supply demand, you start to see prices coming down. So where are we in the market cycle? In a market cycle, and I'll just start right at the bottom. Usually in a market cycle, rock bottom is when there's blood in the streets. It is when there's basically depression for investors and in the market. And you hear things like this. Real estate will never again be a place to store wealth, and real estate's done. You're laughing. There's newspaper articles from 2009, 2010 that literally stated this. Mainstream articles. And what that tells you as an investor, we got a bottom. Yeah. That's what's out there. And this is when the professionals, by the way, run out and buy as much real estate as they can, because the general public thinks it's done. It's depressed. Look at this crash. They probably know somebody that's lost money. Everybody's, on sad town. And this is where the pros go in. And then once they go in, there's a little bit of a spike up. And this is their moment where most people are looking and go, ooh, is this like a fake rally? Is this like, what's going on? There's some activity in the market. People are moving in. And then more people get in. And now all of a sudden you get a nice uptick in that market. And now people look at this and they start to think, oh, wow, this is real. Like it's coming back. Like we see activity. We see deals being done. We see projects now, being completed, and we're starting to see stuff. And this is when the majority of the market starts to come in. Majority of people, your average investors, are coming in, and that gives it a very, very nice rally. And just when that rally is hitting reaches its peak, this is where the average guy comes in. The average person that's never invested in that market now says, "Oh wow, did you see what just happened to that, like that real estate market? I got to buy real estate right now in Miami, or I got to get in right now while it's hot in, Scottsdale, Arizona, or pick your, pick your market that you're in." This is, by the way, when people said, "Whoa, but did you see that Bitcoin just went to 60K?" I got to get in on this.
Yeah.
And this is where everybody's coming into it. And what starts to happen too is now there is behavior, because we humans are strange creatures. So the behavior changes in that market during that time. And this is where people get over leveraged, taking, remortgaging houses to buy more properties. I just used the Bitcoin example, remortgaging houses to buy Bitcoin at 60K, which happened in 2017. This is where everybody gets over leveraged, and there's very irresponsible behavior. Now, during this time or just before this time, the pros are out, because they know this. They know market cycles. Once you start seeing this stuff, this type of behavior, irresponsible behavior, the pros are out. They're like, I've seen this before. I'm cashing out, and now I'm waiting. Like Warren Buffett says, doing nothing is also doing something. So at that stage, like Warren Buffett right now, actually, while we're recording, just liquidated massive positions of Bank of America stock. He's been doing this now every single quarter, because he has to submit a trade plan to the SEC, because he can swing markets. He's that big. Yep. But he's liquidating and going into cash. So these pros are out. Yep. At this point in time, it gets even better. I mean, the irresponsible behavior just goes next level stuff. And we start to see stuff that we saw in the movie The Big Short. Mm-hmm. And this is where it gets wild. You have, you've got, it just gets wild and wild. If you haven't seen that movie, go and watch that. That's the sign of a market top. When, the famous story is you get in a cab and your cab driver tells you, hey, you should be buying Bitcoin, or you should be buying, real estate, or you should be doing this kind of stuff. But so everybody kind of knows that. But in that movie, The Big Short, they really go into how frothy it looks. Here's a recent example. Who remembers the crypto Super Bowl? The crypto Super Bowl, I believe this was about, 3 years ago? I don't remember, but I remember the Rams played against like the Bengals in LA, and it was the crypto Super Bowl. Every other ad was a crypto ad. Yeah. You had Larry David like doing ads. You had Matt Damon looking at the camera and basically challenging your manhood if you're not buying crypto or Bitcoin. Yeah, that is an extreme top. And when that happened, a lot of people in the communities that I am and that do invest in that asset class, they sold everything. When the crypto Super Bowl happened, everybody got out. Yeah. That's when who's not invested at that stage, they come in, and these are the bag holders. So at that stage, then you have your first drop. The crash happens because all the money, all the pros are now selling out. They're gone. It's unsustainable. You have a crash, and not a big one yet. It's just like it comes down about, I would say 10, 15, 20%. And then you're kind of in the doldrums for a while. And most people at that stage look at this and they go, okay, I got in 20, 25%, go. It's got to go back up, but it never does. It's just, it goes sideways. And then there's a moment of something that happens. The shoe drops. And then it goes all the way down. Basically, you give another 30 to 40%, and you go back to depression. Now, where do I think that we are at? I think that the first shoe dropped with that interest rate spiked. I think that first 20 to 25% we've come down with that interest rate spikes happening, and we're moving kind of sideways right now. And I think that there's one event that will trigger the next down leg. This, by the way, if you're listening to this, is not doom and gloom. I actually get pretty excited for market cycles, regardless of where they are, because there's different things that you do during the market cycle. So I'm extremely excited for eventually when the market cycle, when we have that next leg down, because everything's going to be on sale. Yep. Most asset classes, I don't think there's any world that escapes this. I think it's Wall Street and the alternative asset world will have incredible sales of a lifetime. And this is where the pros come in and they scoop up deals that they couldn't even dream of scooping up. It's the equivalent of Black Friday. Everybody knows what they want. Oh, I want to buy, this TV, or I don't even know all the gadgets these days, but they have stuff in mind and they're excited and they wait for Black Friday. It's the same thing with an investor, so you do different things during the market cycle where now there's still some great deals out. There's always deals in any market, but most people are more heavily leaning into cash. And I know you had Carl Snitcher on, and he talked about infinite banking. So that's a great strategy right now while doing some other deals and building your cash position, your war chest, as I call it. And when the market then drops, you're going to have a lot of cash. You're going to have a network that has access to a lot of cash, and you're going to feast on this stuff. And then when that bottoms, that's when you go all in and you over leverage again and that kind of stuff right at the bottom. Think about and I'll finish with this. Think about if you went all in 2012, and even if you over leverage some stuff during that time, right, with debt and, raising money and that kind of stuff, you would have had an excellent run up until 2022 when you started to go all in and over leverage in 2022. You would have had different results right now.
Yep. So take real estate out of it. How does someone and where does someone start looking at alternative assets?
Yes, great question. Think about a strategy right now. Think about a strategy. So what I'm trying to share with as many people as I possibly can is when you are trying to build wealth, and for yourself, for your family, and multi-generational wealth, right? Kids, grandkids, great-grandkids. If you're thinking in those terms, you have to have a strategy that works in any environment. And when you look at a strategy, definitions are very important. So, there's 4 things that I keep saying that you can do in the financial world, in Wall Street and alternative assets. You can save, you can invest, you can speculate, and you can gamble. Savings is when you put your money, your capital, into a vehicle with little risk. There's no such thing as no risk, by the way. Anybody that told you, remember in business schools, they were telling me, oh, these treasury bonds, U.S. treasury bonds, they're risk-free. There's no such thing as risk-free. So in savings vehicles, you have less risk. And for that less risk, you get a very conservative return on that. So the goal there is to protect your capital. You don't want to lose any money, and you want it to grow a little bit, right? And if you do it well through properly structured life insurance contracts with infinite banking, it grows tax-free too, which is huge. Then you have investing. Investing is when you put your money or your capital into an investment vehicle, and you're taking on a lot more risk, but you can control it, right? So when you invest, for example, in any alternative asset deal, you have done your homework, you know the asset class, you know the investment, you know the operator, you know the sponsor, you know their strategy, you know what to expect. You have direct access to them. This is why I love this space. Pick up a phone and call someone. Hey, how are we doing with that property, right? It's amazing. Can't do that with BlackRock and State Street and all those guys. So, and then, of course, there's an exit on it too, right? And you're very, very close to your investment. That's investing. You still take on risk. There's no such thing as no risk. And you take on a lot more than savings, but the hopes there is to get a much higher return, a nice return. And by the way, you should do both things. You should save and invest. You should have a bucket of liquid savings that you can access at any given point in time to invest and whenever you need it for other things. And you should invest, in a very, very controlled, when you have a lot of control, you have full ownership over it, meaning like you're accountable. You vet your sponsors, you vet your operators, you're involved, you're there. You should be doing both of those things to get wealthy for sure. And then the other 2 things that I would share with folks, and this is important to know too, is speculation. So speculation is actually an art form. There's an art and a science to this. I know professional speculators. They are pros. They do this. And what speculation is you look at distortions in the marketplace and you position capital in a certain for those distortions, or you look at upcoming trends that's bubbling and you put capital and in a certain position it a certain way. And the goal there is to have moonshots, home runs, meaning, and I'll give examples. Energy, for example, a distortion in the marketplace was in March of 2020 when oil went to negative. Do you think oil's ever going to stay at negative? Speculators put so much money and a big bet on oil there. And they were just, that was a moonshot running back up. What is it? 80, 90 bucks a barrel. So that's what I'm talking about. What speculators do. Another example of an upcoming trend, a bubbling trend, was crypto in 2014, 2015. They placed a massive bet, for example, on Bitcoin and other projects. AI is another thing. Doesn't take a rocket scientist to figure out that AI was going to be big. So they position capital there. That's speculation. You could be wrong 8 out of 10 times. And those two speculations will erase all of your losses and you'll still have a massive profit. With investing, you want to be right 8 out of 10 times. And if you have two deals that go wrong, you're still doing very, very profitable. So it's kind of the reverse, right, of investing. Most people think speculation and investing is the same thing. I hear this all the time, by the way, in the crypto world. Oh, I invested in Bitcoin in 2014. I'm like, dude, you didn't invest in crypto in Bitcoin in 2014. You speculated, and it was a good speculation, and you profited handsomely. So people really they don't understand the differences between those two, the same as they don't understand the difference between saving and investing. You hear stuff like this: I saved in my 401k for retirement. It's like nails on a chalkboard for me. I'm like, no, you're not. At best, you're investing. At worst, you're gambling, which I'll get to. Gambling is just placing bets and hoping that you're right. Now, again, you can make the argument. There's professional gamblers. I was in a mastermind with a card counter. I understand all this. But how gambling works is the game is structured that even if you win, even if you're right, let's just say you hit the jackpot in a casino, you have 20 people rushing your table, storming your table, offering you rooms, steak dinners, pool parties, bottle service, whatever you want. Why? They want you to stay because they know statistically, and it's all math, the longer you stay and the more that you play, the better their chances are of winning their money back. So they'll would want you to stay for an entire month and they'll get all their money back at some point. So gambling is just placing bets. So again, most people, these definitions when it comes to a strategy is very important. Most people think that they're investing, while I would argue that they're gambling. They're not even speculating, and people don't understand the power of saving. So I just wrote in my newest book, Get Wealthy for Sure, the importance of understanding these definitions and the importance of putting together a strategy with systems, like having an infinite banking system and having an alternative portfolio system in combination. So the one feeds the other one back and forth, and you have an infinite flow from capital that you stored in the life insurance contracts into alternative assets back and forth. And you'll always have access to liquid capital that's growing tax-free in your life insurance policies. And you'll always have a portfolio which you invest in, which if you're right and you do well 80% of the time, you're going to do extremely well and you're going to get wealthy for sure. So think about a strategy. If you're just starting, this is where you should be starting at, is figuring out, okay, I need a bucket of savings, and that savings will then be used to then buy investments. And when it comes to investments, I've covered over 90 different cash flow niches in my books that I wrote for CashFlow Ninja. You can learn everything that you want of something that interests you, and then eventually you can talk to operators, sponsors, interview all of them, build your list of people that you know, like, and trust. And eventually when the deal is right, you start investing with them.
Yeah, no, that's great advice. Well, I don't know how much you can answer here, but do you have 3 to 5 of your favorite alternative assets that you can kind of talk about?
Yeah. So I'll share, I love real estate. I started investing in real estate. I'm dating myself here. 2001 was my first deal in single family. And from single family, I grew into multifamily. I also then went into other commercial real estate. So I'm very active in the resort space right now, the historic resort space. I've invested, life settlements, which is a very, very interesting and unique asset class. Energy, which is great from a tax standpoint, oil and gas. So I've invested in, and of course, I've invested in a ton of other businesses, even businesses in the crypto space, because my philosophy is, with something that's so new and up and coming, you don't have to buy Bitcoin or Ethereum to make money. During the California gold rush, the people that made the money were the businesses that provided all the services for all the miners. If you think about, you've got all these people that went to San Francisco, to go and strike gold, like get gold. But the people that made the money were the people that housed them in hotels, fed them clothes, the saloons, right? And then, of course, the hardware stores, the people that, and of course, the clothing, everybody, Levi and Strauss, that's where that fortune was made. Wells Fargo was the financial services arm for all those miners. So they needed, when they made money, or the people, the mining companies that need to pay these miners, they needed someone to facilitate that. So I've done a lot of those kind of deals. The stuff that's interesting to me right now, and I think this is what your listeners will find benefit of. Like, there's a ton of opportunity in real estate. And yes, there's markets are all different. And, there's markets that are coming down in single family that you can go back in and buy low and cash flow. There's multifamily deals that have fallen apart that operators have taken over, and you can do well there. There's a lot of strip malls and warehouses that are just kind of abandoned office buildings that can be converted into other stuff. Like, for example, I see a lot of money flows going into data centers. Now, if you think about that, right, is there going to be more data 5 years from now than today? You're like, well, that's a no-brainer. Of course there is. Is there going to be more data 10 years from now than there are today? Of course there is. Is there going to be more data 15, 20, 30 years from now? I'm like, that's kind of a no-brainer. So if you look at it, you're like, it's kind of a no-brainer. You're going to need more data centers to store and manage all this data. So that's very interesting to me. You know what I also find very interesting? We're living in a time where there's a lot of inflation. So real things are very there are assets that hold up in inflationary environments. And it's not 3 to 4%, by the way. There's AI bots and models that scrape the internet. Trueflation.org, by the way, great. It's a subscription-based service, but they calculate inflation at around 25 to 26% compounded from 2020 to 2024. That's an AI bot. And if you look at the prices of stuff, I'm like, that's more accurate than any number you're going to get from the government. So what do? Where can you position capital in inflationary environment? Here's a fun one. Fine whiskey. Fine whiskey in an environment. Think about it this way. You're living almost like in a Hunger Games society, meaning like you have people at the top of the economic ladder where there's so much abundance. And unfortunately, you have people at the lower end where there's a lot of scarcity, and the middle class is being hollowed out. They're either going up on the ladder or they're going down. Unfortunately, this is the reality. So as an investor, you're like, okay, fine whiskey. So I'm obviously serving, the folks at the top of the economic ladder, but you can buy barrels, these casks of fine whiskey with some of the best distilleries in Scotland. And you can buy a whole cask. They store it for you. And obviously they charge a storage fee and a management fee. And they could store it for you for 5, 10, 15, 20, and 25 years. And over the course of 5 years, that whiskey is going to be worth a lot more than it is today. 10 years, a lot more. When you get to 25 years, people ask, what would that barrel sell for? It all depends. It's a very small market, but it's a small market with very big pockets that would buy an entire cask of 25-year-old fine Scottish whiskey from a premier Scottish distillery. So that's interesting. There's people that have children that get born and they buy an entire cask for their kids, and that's that's college funds and savings, right? Sell it in 20 and 25 years. That's very unique. I find, there's a lot of very unique kind of assets. Like I said, I've written about over 90 of them. If I have to throw out another one that I find extremely interesting these days is what's going on in the single family real estate market. Now, in the United States, there's a class of people that are working 1 to 2 to 3 jobs just to survive, because a lot of the jobs are not paying enough, right? Especially in an inflationary environment to keep up with inflation. So you would have someone have a job during the day, work something in the evening, and so forth. Well, it's very, very tough for them for housing at this stage, right? If you just look at any market to buy to rent a studio, for example, or a 1-bedroom, even though you're working 3 jobs, they can almost not do it. So this room rental strategy, which involves taking a single family property, converting into multiple rooms with a common area, common space, has worked really, really well. There's a company called Pad Split. I met the founder of it, of Pad Split, and I had dinner with them the one night. That's a platform kind of like Airbnb that facilitates this whole thing, because you and your audience can probably think of all the issues that would come up in a room rental situation with, people that don't know each other. Mm-hmm. They facilitate everything from screening tenants, collecting payments on a weekly basis, and then all the other things that go on in managing the property, managing the tenants, and so forth. I find it's interesting what people are coming up with these days. So, but there's a lot of different asset classes that's fascinating.
Yeah. Well, you said, I don't remember how many books you said you've written, but you definitely have a book that goes into further detail, a bunch of that stuff, right?
Yeah. So for the CashFlow niches, if you're interested in learning just, like I said, I've written over about 90 of these. There's 4 books that I'm giving away for free. You just go to CashFlowNinja.com, the homepage. They're on there. You click on them, and you can download. The ebook and the audio book. I'm just giving those away for free. That's kind of like, since I started that podcast, CashFlow Ninja, that's kind of like my body of work since 2016. And then if folks are interested about learning about a strategy, learning about how to create a strategy, how to position yourself, your family, your business, and your investments for a downturn to capitalize on what I feel is like going to be one of the greatest opportunities ever for investors, I've got a book, Get Wealthy for Sure, the #1 financial strategy for business owners to multiply wealth predictably. I'm giving away a paperback copy. Just pay for the shipping. And folks can request the book at getwealthyforsure.com. That's getwealthyforsure.com.
That's awesome. That's awesome. Before we kind of wrap up here, tell us about your podcast.
Yeah. So I started Producers Wealth in 2015 after being a real estate investor for about 15 years and using the infinite banking strategy to help people all over the United States implement and execute that Get Wealthy for Sure strategy. In 2016, I started a passion project because I started to meet a lot of people that were doing a lot of cool stuff, different asset classes, different niches. I mean, it was fascinating to me of how many ways there actually are of creating income and cash flow income streams, and also how to make money. So I wanted to interview the best minds in business and investing to share all this different, unique alternative wealth strategies and alternative asset investing niches. And since 2016, I mean, we've done over 1,000 podcasts. We've interviewed people like Grant Cardone, Robert Kiyosaki, Jim Rogers, a ton of different folks. And we've covered, like I said, over 90 different of these cash flow niches. But that's been a lot of fun. So for, what is it now, 8 years? Time flies when you're having fun. 8 years, we've put out a show every week. And by the way, what it has turned into, I could have never imagined. It started as a passion project. I wanted to have fun with it. I'd like a crazy ninja, CashFlow Ninja. cash flow was a theme. And then obviously my dad has a martial arts background. He still travels internationally and teaches martial arts. And I always saw like how he every day worked to get better at his craft, which is karate. And I wanted to take that same approach to business and investing. But we've had over 7 million downloads at the time of recording, 180 countries. So it's been wild. It's been wild. I've been at conferences where people say, "Hey, you're the CashFlow Ninja guy," and they're like from Ireland, So it's wild. It's been a lot of fun, and I love continue to learn just from all of my guests.
Yeah, no, that's absolutely awesome. And podcasting is a strange world where it's like just it's you and I talking right now, right? And
right.
Like you said. And I had a buddy that had a podcast, and I remember him saying the reason why he started it so that he could learn from others.
Yes.
Like, why would you do that? Just listen to other podcasts. But now I get it. It's like, I've got you here. I can pick your brain. There's so much information. Like I'm talking to an expert, right? I don't have to listen to another podcast. I'm talking to an expert. I can ask my questions. It's really cool. And obviously you're helping a ton of people. 8 years podcasting. I mean, that's absolutely awesome.
No, it's awesome. And you can ask tough questions because sometimes I listen to different podcasts and I'm like, why didn't you ask him this? And I'll give you an example. I interviewed Ted Benner. He's been on my show twice. That is the creator of the 401k plan, which I don't have a 401k or any of these qualified plans. And the way that it's structured too, it's one of the worst things you could do from a tax standpoint. To defer taxes later, you're just going to get absolutely crushed. I'd like to pay taxes now when I have control over it. I know what it is, right? But I take Ben on the show and then I can push him and I can ask him tough questions and, we can have a conversation and, even he acknowledged, he's like, this was never meant to turn into what it turned into. He was just trying to figure out a way for employers to get a great tax break, pay their employees actually, less of what they were going to pay them, and have an incentive for them to stay working for the same company. That was the goal when he first launched that first 401k plan. But it's turned into this absolute monstrosity once they saw what he was doing,
which is absolutely wild. Yeah, it's I don't think we have enough time to get into 401ks. No, yeah, I don't have one. I liquidated mine. It's probably 10x or more from liquidating it. But man, I appreciate you coming on. What I missed? I'm sure I missed something. What else can you give us here?
No, I think we covered a lot. So we've covered alternative wealth strategies, alternative asset investing, and the importance of strategy. So again, for the folks that are interested in a paperback copy of my new book, I did not say this, but it is, and I gotta say this. It's not like me, but this is a #1 bestseller on Amazon. So Get Wealthy for Sure was a #1 bestseller in 2 categories. If you want a paperback copy, just request a book, pay for shipping and handling at getwealthyforsure.com. That's getwealthyforsure.com.
That's absolutely awesome, man. That's very generous. And we'll have that, your website, CashFlow Ninja, the podcast, and getwealthyforsure.com in the show notes. MC, this has been awesome, man. Ton of information. Appreciate you coming on, and we'll see you guys next time.
Thanks for following, subscribing, and listening to this episode of the Do More podcast hosted by John Farling. To learn more or ask questions, go to l4investing.com.